Good afternoon and welcome to this webinar on GenderLens Investing, organised by Eduk Global and African Business Magazine. My name is David Thomas and I'm the editor of African Business. It has never been more important for investors to factor gender issues into their investment strategies. For those who are new to the topic, GenderLens Investment is an approach that takes into consideration gender-based factors to advance gender equality and better inform investment decision-making. The need for such a strategy is obvious. Today, at least 40% of SMEs in sub-Saharan Africa are women-owned, but only 20% of these have access to institutional finance, leaving a funding gap of about $42 billion. And there is a compelling business case for change. A recent IFC report reveals that gender-balanced teams in private equity generate a 20% higher net internal rate of return. So the sector is really taking off. And alternative investment strategies focused on women fund managers and GenderLens investing account today for $7.7 billion of assets under management globally. That's a growth of 61% from 2018. So it's clear that GenderLens capital deployed at scale can play a critical role in recovery from the COVID-19 pandemic, but many investors are unsure of how to proceed. From reforming investment mandates and boosting the number of women fund managers and women board members, there are many areas that need to be factored into a successful strategy. So today we've brought in experts from across the financial sector to discuss some of these issues, and we have an excellent panel who can go in depth about exactly what makes for a successful gender-led investment strategy. There'll also be a chance for an audience Q&A, so if you have any questions, please submit them in the chat panel on YouTube. Now I'm going to hand over to Sandrine Henton, who is fund manager at Eduk Global. She'll introduce her fellow panelists and some exciting plans to redress gender imbalances. So over to you, please, Sandrine.
Thank you, David, and welcome everyone to this webinar. I am the Managing Director for Eduk Global. We're a private equity asset manager based in Nairobi, Kenya, investing in mid-cap businesses within the food, health and education sectors within East Africa. And indeed, as David has mentioned, we are noticing momentum for GLI investment strategies currently in the building better post the COVID-19 pandemic. And we had a recent report from Wharton, Project Sage 3.0, that did see an increased capital allocation during 2020 towards diverse and inclusive teams generating superior returns, and those teams that are consciously improving their investment decision-making by addressing bias more openly. So one thing we note from the report is almost 2/3, 61% of funds were actually first funds whose partners are experienced fund managers, but the teams are coming together with this focus for the first time. So beyond the statistic, that was also my own journey actually over the last 5 years. With an experienced team, we have 2.5 billion of assets under management and 14 exits across countries and regions and sectors that are relevant to the fund mandate. And we're establishing, an asset manager focused on investing in the essential sectors in some of the world's fastest growing regions across Africa. We come together to manage a small fund, and the firm is over 65% women owned, with equal gender participation at all levels, whether it's the team, the board, or the investment committee. So indeed, Eduk Global today is one of the first fund managers that is buy-rated for an investment allocation by the Stanley Multi-Manager Selection Team, part of the Standard Bank Group, under the African Women Impact Fund, AWIF. The team was also part of the 11 GPs that were invited during May this year to co-create an accelerator facility under the flagship fund program of the 2X Challenge, which is part of the G7 DFI commitment to genderless investing. Yet, many institutional investors are still missing out on the possibility of generating superior returns by investing in diverse teams and gaining fresh insights from compelling investment strategies for Africa. So against this backdrop, African Business, really grateful to have you guys on board. And the team at Eduk Global, we've invited our partners, so the 2X Challenge of the G7 DFIs, Goldman Sachs and Standard Bank, to lead a conversation with us today on GenderLens impact investing and the post-COVID-19 economic recovery in Africa. So on this panel with us today, I'm super pleased to introduce Jen Braswell. She's a Director of Value Creation Strategies for the CDC Group, and also the co-chair of the 2X steering committee. Jen has championed the GenderLens investing within the CDC group and beyond with the G7. The 2X challenge seeks to bring capital to empower women in emerging markets. And we noted the recent announcement a few years back of the G7 committing $15 billion to allocate to GenderLens investing by 2022. Then we have Leeds Stedze, Executive Head, Institutional Clients and Global Markets within the Standard Bank Group. Leeds is a self-appointed champion of GenderLens investing within the bank and has launched the African Women Impact Fund, which is a very exciting fund-of-fund structure targeting $1 billion to women-led fund managers across Africa. And this was done in collaboration with the UN Economic Commission for Africa. Last but not least, we have Sean Toye Kayode from Goldman Sachs, who is the Vice President for the EMEA region with an A at the end, within the Launch with Goldman Sachs program. So Sean has many lessons learned to share from GS investing $1 billion from its own balance sheet into women-led businesses and fund managers since 2018. And she will update us on how the Launch with GS program is shaping up a strategy going forwards. So back to David to moderate this exciting session with us, and stay tuned.
Sure, thanks very much, Sandrine. And as you mentioned, there's a huge amount of experience across this panel, and we've got a huge amount to discuss this afternoon. So I think first I'll turn to Jen at CDC. Given things like the 2X initiative and all the momentum that appears to be behind GenderLens investing at the moment, are we witnessing real and lasting cultural change in the investor view of women entrepreneurs in Africa and beyond? I think you'll just have to unmute yourself as well, Jen, if that's okay. Thank you.
Yes. Thank you very much, David. And thank you to Educate Global and to African Business for the invitation. It's a great panel, and I'm looking forward to the discussion. In terms of thinking about GenderLens investing, and is this a moment that's going to last? I think it's up to all of us to ensure that it does. GenderLens investing is an idea whose time has come. Women are everywhere. Women are everywhere in business, and valuing how and where women play is simply good investing. And I think that we are starting to really gather the data that proves that when we are not valuing where women participate in the private sector, whether it's as business owners or as valued members in workforce or as targeted consumers, we are leaving money on the table. And we are leaving impact on the table. We are not fully engaging with the whole suite of players that needs to be engaged in the private sector. So that's the starting point. I do think, though, that we are at a tenuous moment. There's a lot of momentum around the idea of GenderLens investing. There are a lot of investors who are picking it up and building it into their systems. But we need to not be, I think, distracted with other factors that could come into play. And we know that there are a huge range of needs that we need to think about as investors. But keeping focus on where women participate needs to stay a top priority. And frankly, it's an easy priority. Women are easy to understand. They're easy to count. They're easy to see. It's not rocket science. And so I'm looking forward to continuing the journey to help more and more capital allocators to invest with the GenderLens.
Thank you. And clearly, as you say, one of the big questions that comes up is that of female participation. Turning to you, Sandrine, one of the big debates has been around women board members and whether under the new initiatives we're seeing enough of a movement towards bringing more women on board and increasing that participation. Then hopefully that will have a knock-on effect on investment decisions. How do you see that going? Is that an exciting movement at the moment?
Yeah, thank you, David. So indeed, there's clearly momentum. We see that in the growth of asset under management going into GenderLens investing. Yet we've got to remind ourselves that it's still a relatively small allocation relative to the trillions being managed currently by white male in the asset management industry. So how do we keep that momentum? What are the challenges we've yet to overcome? Obviously, when we do make investments, we are looking at women and the impact on women on multiple layers. Obviously, we try to, within ourselves and within our own organization, we have gender participation at all levels. We like to encourage our portfolio companies to do the same and to look at women participation on their boards. When we look at our sectors, food, health, and education, these are obviously impacting women, both as employees and as consumers. If we look at the women farmers, the nurses, and the school teachers, as well as women being the key decision makers on paying the school fees, on the healthcare bills. So investing in women, as Jen echoed, is not just for impact, it's also very good for business. And we do look at value creation strategies to look at that women representation. In terms of the investors, that's also interesting. Indeed, I would like to draw our attention to the home bias and the fiduciary duty to invest in Africa, as well as the importance of having women fund managers in terms of the performance, generating alpha, governance, and managing some of the key risks, especially for foreign investors looking to enter some of those lesser known geographies, perhaps. I think there we have some challenges to overcome. The fiduciary duty to invest in Africa, many US investors hear Africa and think risk. We see long-term growth, we see alpha being generated, which is particularly relevant to pension funds in the US and Europe that are sort of entering their no growth stage in the economic cycle. And US investors who are not looking at investing in Africa are at best limiting their opportunities, at worst failing to fulfill their fiduciary duties. And during the pandemic, we've seen a pullback with foreign direct investments in Africa falling 16% compared to the prior year to about $40 billion. So Africa's economic transformation, ever-increasing opportunities, have not yet resonated with many institutional investors, despite young, fast-growing labor force, where young people and women are clearly the key drivers of the consumer economy in this market, with a rising middle class and a thriving ecosystem for startups and businesses. So Africa, where my home is, who also saw positive GDP growth during the pandemic last year, it was slightly below 2% and is now back around 5%. This was a region that still was very resilient to the pandemic, with deep consumer markets, and where the informal sector also kept the level of transactions going. And it is home to some of the world's 10 fastest growing economies, even during the pandemic: South Sudan, Benin, Kenya, Rwanda, Ethiopia, Tanzania. So I think we need to see more capital being allocated to women, more capital being allocated to emerging markets. Those two thematics go really well hand in hand together. Many of the investors that are looking to mitigate some of the risk need to seek help from unconventional partners. And that is investing in women fund managers with a presence on the ground, development banks and DFIs that can provide the credit guarantees, concessional capital, and transaction advisory funding to improve the risk-adjusted returns of these investments in this market. I think the US government Prosper Africa initiative is doing a good job at connecting institutional investors with such partners. And that is something that I would really see as a challenge yet to be mitigated, to make sure that we can keep the momentum of bringing more capital to this part of the market.
Sure. Thanks, Sandrine. Turning to Leeds at Standard Bank, I mean, clearly, as Sandrine's just mentioned, the opportunities, particularly in Africa, are absolutely immense. And the work that Standard Bank does with the corporate sector in Africa and within the bank itself, do you feel that there is that realization of this huge opportunity that's there, both in terms of the Africa investment picture, but also specifically about how that relates to women and women entrepreneurs on the continent?
Thank you, David. Firstly, thanks to you, African Business, Sandrine, Goldman Sachs, Standard Bank, for this opportunity. And good day to everybody in the audience, and a great pleasure for me to be with a fellow panelist here. So one of the things I wanted to answer your question simply, yes, we are seeing significant progress and change that is taking place. We have seen an explosion of interest in ESG since the COVID crisis hit. I still believe there is less knowledge on the S. I think the S has remained silent. And to add to possibly what you said earlier and what my fellow panelists have also shared, if you look at the continent currently, women account for slightly more than half of the population, yet we generate only a third in terms of the continent's GDP, that is as of 2018. So if progress towards gender seems to have stalled since the onset of the pandemic, and at the current pace that we are on, it will take Africa 142 years to actually see change. And to be honest, I think as much as we're seeing a lot of change, I think we need to accelerate the pace of change. And more importantly, I think we need to work together to collaborate. To come back to what we're seeing from a bank's perspective, yes, the bank has been intentionally and deliberate in terms of focusing on actionable and socially impactful projects that target and empower women across the continent to be the drivers of Africa's growth and sustainability. I'm very proud to say this, but our group CEO, Mr. Sim Shabalala, is a thematic champion for the He for She movement, which is for gender equity, led by UN Women. It is a global initiative that invites men and women to stand in solidarity for gender equality. We've done a lot of work in the bank across regions in terms of banking programs. You can go to Kenya, we have Dada, there's some in Malawi, some in Mozambique. So this is something that we've been doing and is part of our strategy for a while. Globally, if you look at the global picture, women only occupy 9% of the chief executive positions and only 23 in terms of the C-suite position. We have a very ambitious target in the bank. We've want to get to 40% of group executive roles that are held by women by 2023. We're seeing a lot more work in terms of what we're doing around the asset management space. And this is through our partnership, as Sandrine said, with the African, with UNECA. We launched the African Women Initiative in February 2020, sorry, the dates blend, at the African Summit in Addis Ababa. And the whole aim of this initiative is to create a sustainable investment platform to grow the number of women asset managers on the continent. As we know currently, women manage less than 6% of the funds in Africa and typically only get funding for micro-tap initiatives. So what we're looking to achieve is to move women from small-scale money management to making large, sustainable capital allocation decisions. So there's progress that is coming through, but I do believe that there's a lot that also still needs to be done in terms of considerations for those that allocate money. And I'm not sure if there is much focus, or maybe gender is as implicit as the environment or as governance when it comes to ESG. And when you come to the continent, these are bread and butter issues. And I'm very happy to say that we're not just talking as part of the people that are here backed by our institutions, but we are actually doing. I think for me, the challenge is going to be, what is it that we're not seeing enough of? You know, what do we put out there and what is needed? And I think that's going to go back to what Sandrine said earlier, those that allocate money, you know, the asset owners, global institutions. And that's what we need to focus on. But we're seeing a lot of change. Thank you, David.
Indeed, that's really a crucial issue. The role of women fund managers. If we turn to Cheyenne, could you perhaps explain a little why that's such an important emphasis across the financial services sector? What could be the results of a strategy that places more assets under management in the hands of women?
Yeah, it's a great question. Thank you so much, David, for having me. And, you know, thanks so much, Sandrine, for putting this together. I'm excited to be connecting again with Jen and also meeting Lindy. I think from our perspective, you know, since 2018, we really decided to double down on our commitment to actually close the investing gap for underrepresented founders and fund managers. Put quite simply, if we don't put money in the hands of women, the issues that we have in the world will not be resolved. If you fund more women asset managers, you will then fund more women entrepreneurs. Studies have found that, people invest based on their bias. If you don't understand a business, if it's a female-run business, you're not really going to understand it if you're a male investor. And so we need to make sure that we can address the issues that the world is facing today by diversifying the flow of capital across both genders. I mean, for us at Goldman Sachs, that looks like our Launch with GS initiative, which I took on the role to lead our European, Middle East, and African strategy in January. We started in 2018, and it was really off the back of seeing research that diverse teams outperform. I was reading the same study that was mentioned at the beginning of this webinar, the IFC study, that, in emerging markets, 70% of all VC and PE firms are run by men. Although, and if you look at the stats for GenderLens Investing and the returns, is 1.7x. That is just not good enough. So for us, that looks like intentionally putting aside money on our balance sheet to invest in women asset managers, women VC funds. And we try to make sure that, the partners that we partner with are not just having a woman as a GP for the sake of it, but actually that the gender lens strategy is really pervasive throughout the strategy. So that would look like at least 2 women GPs or, a racially diverse GP, and investing in businesses led by women also, because it's a trickle-down effect. And we really want to make sure that capital is actually getting to the hands of those that need it the most. I think one of the other things that we mentioned when we were preparing for this was how, board seats actually has to have an impact. We have to have women on boards as well. So it's almost like we need to attack this issue from different angles. And with regards to having women on boards, really, really proud to announce that in 2020, Goldman decided that we will not take any company public if they didn't have a woman on the board, at least one diverse person on the board. That was 2020. We waited and there were crickets. Nobody followed us in that initiative. And, sometimes you really just have to be a bold institution to say, we're going to do what is right and what is commercially savvy, and we are actually going to lead by example. In 2021, in July, next month, we're going to be announcing that we're increasing that number to 2 diverse individuals, and 1 actually has to be a woman. And it's not just about making these public commitments. You actually have to create the strategies within your organizations to sustain this growth as well. And what does that look like? It looks like us having a board diversity initiative where we actually go out and find candidates and refer them to our clients and to our portfolio companies. Because we can't just make these commitments without actually backing it up with action. We need to be able to do both. So from July 2021, we will not be taking any company public that doesn't have 2 diverse individuals, and 1 has to be a woman. And, I just wanted to share a quote from our CEO, David Solomon, because he's really been the one spearheading all of our diversity initiatives, which I will talk more about as we go on in this webinar. And he says, it's important to go beyond statements and policies alone. We have a dedicated team to help support our clients meet and exceed their board diversity goals. So, the reason why Launch with GS exists is because we made a commitment publicly in 2018 that we will invest $500 million in female-led companies and female investors. In 2019, we expanded that to include people of color. In 2021, we expanded to include Europe, Middle East, and Africa, and to double down on our 500 million commitment. And that was because we'd already deployed all of the capital. We've been fortunate to back 14 incredible companies, 12 fund managers, some first-time fund managers, to the point Sandrine was making earlier about being able to really, really try and put money in the hands of people with experience, but that are coming together for the first time to really drive capital going into the hands of women that need it the most. And so, yeah, that's, I've talked about many things, but I guess the point I'm trying to make is it's not one strategy or one firm that is going to make a difference. We all have to come together, and we have to look at it from the top end, from the bottom end, and everything in between.
Sure. Thanks, Sharon. So, Jen, clearly CDC has been involved in exciting projects across Africa and beyond, which focus on women entrepreneurs. What are some of the proven impacts of the kind of investment strategies we've been talking about on women entrepreneurs and women-owned businesses? And do you think that these kind of investments can aid a recovery from the global pandemic?
Yeah, thanks for that question. I mean, I think the global pandemic has put a very clear spotlight on the challenge that women generally have in terms of the double burden. So one of the things that I see coming out of the pandemic is a real movement within the investment industry to understand what is the investable sector that supports the care economy. Because what we found, both men and women found that in this disrupted period through the pandemic, we've all suddenly faced this additional burden with elder care and child care and domestic responsibilities that no one was previously taking on at home. And it pulled a lot of women out of the workforce. It's put a lot of strain on families. And there is a need, both from a public policy point of view, but also from a private sector solution point of view, to focus on building this sector, I think, as part of the solution in terms of building back better. Now, taking a step back and looking at GenderLens Investing and the role of investors and capital allocators in moving more capital and solving some of the gaps that we're seeing in access to finance, both for women entrepreneurs, for women who are starting up businesses and looking for venture capital, as well as for businesses that are supportive of women in workforce and creating products that are specifically and disproportionately tailored to women. It requires a lot of work. It requires operationalizing a gender strategy is not as easy as simply saying we're making a commitment and here's our ambition. It requires change management. This is not business as usual. It should be business as usual, and I think that's what we're all striving towards. But it requires internal advocacy, engagement and upskilling, and frankly, it requires shared definitions. It's very hard to say we're going to invest it with a gender lens writ large. You really have to set out, what does that mean? What are we looking for? What does good look like if we're talking about ownership? What is the percentage of ownership that meets the definition in our criteria? What does it look like when we're talking about the right level of percentage of women in leadership? What does it look like when we're talking about percentage in workforce? That's what we set out when we created the 2X framework, which is a very simple set of criteria that set out what the thresholds look like based on global benchmarks, as well as the indicators that flow from the criteria, which set out what are the KPIs that we're tracking over time. And it is really interesting to have been in the conversation with a variety of institutional investors over the last few years to understand how little credible data we have, how our systems aren't actually systematically gathering the information, how financial institutions' data systems really don't ask what is the sort of gender split in this business, who's the owner, what's their gender. That information and the lack of information makes it really hard to invest with purpose and intentionality if you don't have the market information. I think we have the muscle now across the industry to build it. And having shared definitions, reporting frameworks so that we can gather that data, report it, and share it out is the next frontier. And I do believe, and this goes back to your earlier question around, is this just a moment that's a blip, or is this going to last? I do believe that there is a critical mass of both men and women in the investment industry who are ready to drive this forward. And the next phase for us, I think, is going to be around the mechanics.
Sure.
The data, the systems.
As an investor, I mean, I saw you nodding along to a lot of that. It seems that, in terms of the data that's coming back to inform investments, to inform mandates, it's not really there at the moment. Why is that the case, and what more can be done in that area so that investors have the tools at their disposal so that they can go forth and invest in women-led companies? I think you'll just have to unmute, I'm afraid, Sandrine. Thank you.
Thank you. You should have known by now there should have been enough Zoom call for me to know how to unmute, but here you go.
Sandrine, sorry to interrupt. We have a sign at Standard Bank that we use. That means you need to unmute.
Great. Indeed, I think this is one of the reason data why we like the African Women Impact Fund of Fund so much, because they've gone through a process of receiving application for about 400 women fund managers across Africa. Took about 20 GPs into quite a serious operational and investment due diligence process. And we're one of the first managers that was buy rated out of that process. But effectively, a fund of fund structure will allow the measurement of performance of women fund managers on the continent across asset classes, private equity, private credit, listed equities, you name it. So I think this is going to be a really long-term exciting vehicle for us to also get the data on women-led fund managers' performance in Africa. And if you ask me, what are the expected results of investment strategies that focus on women-led fund managers in the recovery sectors. There's a direct link, and we've seen that from the Wharton Project SAGE 3.0 report that covered about 138 fund managers that highlight a really interesting correlation between women fund manager ownership and an increased investment allocation to the recovery sectors in health, food, education, and the digital services. So this alternative investment strategy is really well poised to continue. I agree with Jen. We are going to see increased momentum because we're provided uncorrelated returns to institutional investors, particularly Europe and US, but also local pension funds in Africa that are starting to look at making a private equity allocation, especially to these thematic sectors. It's well recognized by the investment community, and the IFC also macroeconomic analysis supports that food, health, education are the recovery sectors that will help us bring the refreshed growth, jobs, and limit the collateral damage of COVID-19 for our communities. So these essential sectors for all of the economists in the room are all about increasing the base level of transactions in the economy, increasing the velocity of money flows, and this is how we will undoubtedly help reboot the system. So we all know this crisis is going to yield opportunities for quality and solid investments, and they're both commercial returns and impact to be realized by investing in these sectors and in women-led fund managers. And it is about high time we put in more capital to that, because if we look at the investment landscape for Africa, it is really dominated by very large funds. Now, these very large funds are going to struggle. They already are struggling in terms of there's a discrepancy between the amount of capital they're raising and the amount of capital they're actually deploying, but also finding exits for these large tickets is going to be trickier. So it is really high time that we bring capital to the real economy, to the real sectors in the economy. If we look at capital allocation for Africa, it's mostly going into infrastructure, energy, financial services and banks, and maybe tourism. So it's high time we bring it to the essential sectors and to the mid-market, to the medium-sized businesses that are part of this vibrant ecosystem. In terms of concrete actions to keep the momentum and some of the expected results that we like to see, definitely the measurement of the returns of women-led fund managers and those GLI strategies would be great over time. Succession planning is another area where we need to take stock of some of the failures of private equity in the region, if I may say. We need to get more women into the asset management industry. So succession planning is generally an issue, and how to get more women into the senior roles of asset management is a key question. We need to think about that in terms of how we build for that in our own respective organizations. And then simply changing the incentives. At Eduk Global, we have a model which is quite unique, where we are sharing carried interest and GP ownership across the team, including the support function. So everyone from analyst to director has access to carried interest and GP ownership. And these support functions like risk, governance, legal, compliance are really rewarded from the investment decision, from the investment allocation. And that's really, really important to tackle some of the risks that we've seen and some of the failures that we've seen in the market. I think that would be it. Bringing more institutional investors also to the table, I think, would be what we expect from these strategies. Thank you.
Sure, thanks. And Leeds, plenty to get your teeth into there, but I think one interesting thing that came up was that the role of investors, and particularly investment mandates, do they need to change to reflect these new realities? And how easy is that to do when you have all the challenges we talked about, like the difficulties around exits, risk in various markets? Is it easy to change investment mandates, and is that actually a useful part of this process?
Thank you, David. I'm actually thinking that, allow me to digress a bit here.
Sure.
From a bank's perspective, I think we've set ourselves a very ambitious target to raise $1 billion in 10 years. Yep, we said it. $1 billion. This is a marathon, not a sprint. And I'd like to start back from the feedback we received when we started. And possibly our biggest fear was that we're going to go out there and we're not going to find these women managers, or these women-owned or women-led fund managers. And trust me, we were pleasantly surprised. Not only did we find them, we found them across the regions, across the continent. Our call to action campaign was over 3 months. We made sure we search far and large at every nook and cranny and corner of the continent. We found them. So I'm starting with the challenges that you hear. We cannot find them. They're not there. Visibility. They, it's too small. Ticket sizes are not gonna, it's gonna be too much work. And I'm just saying, the fact that we've already done some of the work, it means that these things can be changed. And I'm saying that it is to the will of those that control the money, that own the money. And I know that our parents, and I'm talking about a personal story, from our sisters, mothers, the wives and brothers and sisters, our fathers, it is their money that is invested in these pension funds. And the biggest on the continent, I'm talking about the GPF, the PICs, and those are people that are not going to say no to this, because why would you not? On the continent, 70% of business consumption decisions are made by women. If you look at who actually is raising the continent, and I'm not talking about, I don't want to talk about Africa here, and I'm just saying that every time, this is a bite-sized chunk, step by step. Every time we find a challenge, we solve for it. If the will is there, surely I'm sure that it cannot be that difficult. If the DD, the due diligence process, if the asset allocators, if pension funds care enough, and this is where it comes to me to where is gender, what are the considerations? It was like BE in South Africa. It's great to make it a policy, but it's actually what do you do? How do we live this? And I don't think there's lack of will in terms of making these things happen. We work, I shared with the panel, we work with MEDA, which is a mobilization of US institutional investors for the development of Africa's infrastructure. I've seen funds in the US go back and change mandates and be allocated $200 million to invest in Africa. And this is talking about the US, where they look at Africa, we're not one country, we're 54. I can just imagine the challenge. So for me, the question is to put it right back to those that make the decision. Is it too hard? Is it something that can be accommodated? Do we want to be implicit about this? And for me, it goes back to the changes along the ecosystem. So it is not just the asset allocations, the pension funds, it is the strategies, it is where we spend our time and money. That's what's important to you. Is it part of the strategy for the business, for your bank, for where you work? Is it something that is day-to-day and institutionalized, not a side thing, not a project that is run by others? And I'm glad to say that from where I sit, you'll be surprised to find that this fund, it was not something that started at the top of Standard Bank. It was literally from all of us that work in the bank. And we are lucky and fortunate, I guess, to work with an institution that is aligned in terms of our values and purpose. So for me, the question is to put it right back there to the audience. And I know we have DFIs here, we have banks, we have investors, we have everybody. What needs to change? Our strategies? Do we need to be more implicit? Is it our mandates? Are we check? Is this something that is measured? Is it a consideration? Just like you check in terms of your performance, is this gender something that is a consideration? And I actually think that if we've put men on the moon, I'm sure we can actually do this.
Sure.
So for me, I think everything is doable. I'm an accident of nature in that if you look at our history, I shouldn't be where I am today, but I am. So change is possible, right?
Sure. Cheyenne, how do we go about turning it from being a kind of exception where we're talking about this on panels and we're having separate discussions about it to making it a fundamental part of business strategy that isn't really questioned, that we just assume that women are involved at every stage of the process and we don't really need to discuss it anymore?
Yeah, I think it's a combination of many things. And I think, Lindy, what you shared really touched me, especially on your personal experience and on what is truly possible. I think from our perspective as a firm, we really just try to think about the positioning of things like this in the organization, because the decision is very important. You know, Launch with GS started in 2018. We stuck out when we came out with this idea of directly investing 500 million in female companies and female investors. It was not the norm. And it was because we had a leader who was a woman who decided that she was going to do this. And so I think there's something to be said about leadership, the right leadership with the right framework and thinking. And then there is something also to be said about when you create these initiatives, are you creating them to be sustainable? And where are they positioned in your organization? Something that we noticed, you know, off the back of, you know, everything that happened in 2020 with the killing of George Floyd, etc., is a lot of these diversity initiatives sprung up. However, we had already been in this since 2018, and we were just investing and trying to prove our thesis. And I can say today that we have a portfolio that actually shows the returns that we're expecting. Going forward then, how do you position this in your organizations? So Launch with GS used to be in what we called our firm-wide strategy group. And now we moved into our wider asset management division, which was newly formed, bringing together all of our investing teams. This is great because it gives us more influence to really make sure that these principles are not just for Launch with GS, but are part and parcel of our total investment strategies. And so within asset management, we've got our real estate division, we've got our credit division, we've got our growth equity team, who I actually sit with, to make sure that, you know, we are sourcing more in a more diverse fashion, etc. So the positioning within the organization is very important. Leadership is also very important, and also making sure that you measure your progress. So when we make these commitments, they are public commitments that we really can't run away from. When we decided that we were going to double down on our $500 million investment to $1 billion, that was a public commitment. We also recently in the US, you know, announced our 1 million Black women program, which is driving $10 billion of capital to Black women in the US over a period of 10 years. What I also want to say is, you know, a lot of companies are doing something that I've noticed recently, which is blending their philanthropic efforts with their commercial efforts. I don't think that is actually the right strategy. I think if you're just reallocating money that was already going to be given away and calling it a commercial initiative, it is not really a commercial initiative, and it is not sustainable. So we separate the two. We have our Office of Corporate Engagement, where we have our 10,000 Women program, our 10,000 Small Businesses program, which is really and we're actually present in 6 African countries, and I've had incredible success stories from that alumni of people. You know, then we also have our commercial initiatives. Launch with GS, we're saying, okay, you built your business to a certain level, you then need a check to grow this business. You know, we will work with you to give you that next check at the sort of seed, Series A, Series B level. And then so the idea is that we're actually following these companies sort of throughout the entirety of their journey. And if it's not embedded within the strategy, if it's not embedded within the right parts of the organization, so not charity, but actually realizing that this diversity is good business, and we're going to put our money where our mouth is and structure our teams to make sure that we can support this, I think that's the right way. That's the right way to do this. And I think also it's really important to be public. You know, it's important to be public. It's important to say out loud what you're trying to achieve so that you have the accountability of the public. And I know that there's many other banks here, many other, you know, institutions here that are thinking through their diversity initiatives. I think I would say, you know, bring a good team together, make a decision, and also make it public. And then you'll be held accountable, and you can't escape making any progress.
And one of the questions that this raises is a phrase which I'm sure nobody really likes, but pinkwashing, which is, you know, to what extent do organizations actually do this just to get a bit of good PR? Jen, do you have any experience of that? And do you think that's a real danger when we're talking about, you know, all the important progress we've had in this discussion today?
I do have experience with that. It's something we've been thinking about a lot with 2X, because the 2X challenge has big splashy numbers. I mean, we did collectively invest $7 billion with a gender lens. And we've been very diligent to make sure that those investments are meaningfully supporting women. We require commitments from our businesses. There are conversations that happen. There are value creation activities that support businesses to meet targets, et cetera. But as we are moving forward, and particularly as we are rightly opening windows and pools of capital that are specifically targeting dedicated diversity metrics, whether that be for, you know, windows for fund managers that have gender balance, or any other kind of diversity asset products, we have started to see people jumping on the wagon saying, well, how can I get a piece of that? And to some extent, I think that's a good thing, right? So to some extent, you want to encourage companies that are looking to fundraise to think about the gender balance, but it needs to be meaningful. It's not about appointing your sister onto the board. It is not about making a sort of a token appointment or trying to create a facade. And that, to some extent, will be the challenge for us as investors and capital allocators to ensure that we have the right level of systems in place to make the judgment calls. And again, that goes back to data, and it goes back to, I think, the ability for investors to do the due diligence and make the decisions themselves. But where I think we're going, and I'll just make a quick comment on this, is that there is a gap in the market around assurance. And what we are just about to launch this week is a new industry body called the 2X Collaborative, which will be open to members across the full spectrum of capital allocators. We'll provide a whole range of membership benefits, including resources and collective working groups on specific topics, et cetera. But one of the things that the industry body will be doing is continuing to build a shared standard. And part of the ecosystem that we've seen is missing is this assurance, verification, and certification mechanism. Because if we are all embarking to create new products that are about gender balance and about creating gender smart assets, there does need to be an external mechanism in the market to be able to verify that so that we can avoid the pinkwashing. So I would say to everyone listening, stay tuned. This is something that we'll hopefully be bringing to the market soon.
Sure, thanks, Jen. We've got some good feedback from the discussion so far, and it's probably just about time to start our Q&A session. And I guess the first one, which is an interesting question, which comes up with something that we're actually just about to discuss anyway, I think, was how can we really bring this back to African entrepreneurs? We've talked a lot, whether it's on pinkwashing or on mandates, about how change needs to happen at pension funds, at investors. But how can your average African female entrepreneur access this support? How can they get involved in this world if you're a small business person in Accra or Nairobi? And you hear about these kind of interesting discussions. How do you get linked up, Sandrine, with the kind of funds that you're talking about, and how do you make all these interesting discussions a reality in terms of financial support?
Happy to give an example in terms of how we reach out to women-led businesses in the context of, East Africa and what we're doing here on the ground, David. We have links to associations, business associations, and we've also made a commitment to the $1 billion Fund for Women to at least invest 10% of the fund into women-founded businesses or businesses that have women as part of their management teams. So how does that translate to finding these women-led businesses on the ground? We have a partnership with KEPSA, which is the Kenya Association for Private Sector Association. There's also associations of manufacturers and small business associations. So we're members of these associations where we can talk about our work, and these typically also have specific GenderLens or gender working groups for women and young people as well, because our strategy focuses both on women and youth. So we have an outreach. We also do a lot of research that's database driven and sector research, and to find out those companies and to talk to those management teams. The other aspect I would say is around being able to meet women in the value chain. So identifying these value chain players that are really strategic for women. I mean, our sectors are already very strategic for women. We've discussed that already, but finding the mid caps that are working with a lot of women farmers down the line, because we would invest in typically the mid caps, not necessarily the micro level. And I think it's important that the micro level is connected to the market, and we're able to identify these value chain players that can uplift and use our capital to uplift, women-owned Juka shops that are selling essential goods and services in the rural areas, and also partnering with banks. So we've seen a lot of positive recently in terms of partnering with banks that are servicing women. Women are also, very much the driver of the entrepreneurial force and workforce in Africa. So partnering with the banks to help us identify these good women-led businesses that we want to invest in is also an essential part of the equation.
Sure.
Yeah, can I just jump in just to say something, just to the point that Sandrine was making? I think, it's very important for organizations to realize that they have a lot of power to create their own ecosystems. So I mentioned our 10,000 women and our 10,000 small businesses programs that we have actually been running since 2008 on the African continent. And most recently, that those programming and those ecosystems are now accessible online. But if you think about, the flow, that then acts as a feeder program to us at Launch with GS, where these businesses, we helped them when they were kind of at their beginning stage. It was a pleasure of mine, about last week to speak to one of our ex 10,000 small businesses alumni, whose business is now sort of in the revenue marks of millions and is now looking for venture capital. So you don't always have to look external. Internally, you actually have the power to also create your own ecosystem with consistent policies that address all parts of the market.
Sure.
And David, maybe to add to that, Sandrine, that is important. Sorry, Sharon, that is important. I'm thinking from the fund itself. I mean, we had an action campaign that went all out for 3 months. Away from that, we work with Lionesses of Africa, which is a network of female entrepreneurs across the continent. It has over 1 million members. We've been working them for over 15 years. One more thing as well is actually in terms of actively making sure that we collect the data internally, because these are people that are in our businesses, and also more importantly, supporting them when they start and then to grow with them. But away from that, one of the things that I think is important, we've had a number of engagements because you want to create visibility, you want to create awareness, and that means you have to be out there. When we went out for the campaign, we were even in newspapers because in some area, and it was also in different languages when we had to, like French, Portuguese, right across to make sure we reach everyone. But these webinars that we host, there's a number of these things that the bank hosts, these sessions, webinars, and that's to create visibility and awareness, to make sure that women, we reach women and they're aware that there's these initiatives, because it's great to have them. But if the intended beneficiaries are not aware, then it actually doesn't help anybody. So I think for me, also leveraging each other's platforms as Goldman Sachs, as CDC, as Africa Business, we do that. We do a number of publications. We need to be out there more than ever now because people are stuck at home. And I think people are watching more in terms of digital platforms, are reading more. So it is important to create that. So we're mining our own internal data, but more than that, making sure that we reach out and work with other organizations and networks that purely focus on actually women entrepreneurs.
And so that awareness is now there among women entrepreneurs in Africa, that support is available to them, that they know that they're not alone when they start their businesses.
So what I'm saying, I said earlier, we have like banking programs across regions that are active in each country. That means we know as a bank, I mean, we're in over 20 countries. We've been around for 153 years. So it's not boots, it's boots on the ground. We're part of the ecosystem. We have the depth, we're the reach, we're part of the communities we operate in. So for us, really, it is one of those where we're making sure that it is out there. And what I actually like more than anything from our banking perspective is actually the people that work in the bank are the biggest champions. So we all out there. We had a meeting the other day, and I would love this, our sustainable finance team, and we're focusing on making sure that we want to lead this space, the gender aspect of it. So Shayon, there's the challenge. As Standard Bank, we actually want to be more visible and actually we champion the gender part of it. So we are being visible in every way, shape, or form to make sure that we get the word out there to women across.
We've had a second question come in from viewers, and this is possibly best directed towards Jen because it's specifically about the Commonwealth, but also about an interesting sector. What more can we do to fund women in emerging tech, emerging tech in the Commonwealth, given the issues of access to funding in tech spaces and potential? So, women investment in tech in the Commonwealth. Do you have any experiences there as a CDC group?
We have, and we've seen what I think might surprise a lot of people, which is there are a lot of women in tech. There are a lot of women starting companies, and there are a lot of women who are using their new platforms. And we've invested in a fantastic business in India that is specifically targeting bringing women into the workforce across rural areas. It's an artificial intelligence-based business, and they are specifically targeting upskilling women to bring them into the space. So again, this talking about the cascading effect. I think the real challenge again is the dislocation of capital moving into to women startups, which is typically where the sort of tech industry is at the moment, and that's around venture capital. And I think that there are a lot of reasons for that, partly because a lot of the impact investors and the DFIs are only just starting to move into the VC space, because the DFIs are sort of first movers. But on the other hand, we are seeing that there are real opportunities for investing in VC with a gender lens. And I think that this is something that we'll be needing to focus on across the industry over the next year. I suspect that the opportunity is going to speak for itself.
Sure.
Yeah, I would echo that actually. The words from Jen in the education space as well, education technology. We've all learned from the pandemic how critical that is. And I think we would start also seeing the same in Africa, obviously maybe using blended models of physical and online learning, because people here still also like to have that physical connection for learning. But we're expecting to see much more opportunity in the edtech space coming through. We're looking at a few at the moment as well, and that's is super exciting. The education sector typically is less than 2% of capital globally. It's also less than 2% of foreign aid, so it's high time that we bring a lot more capital to the education sector generally, especially edtech and digital services. The B2B element also of the e-learning platforms is definitely an area that's needed over here, as most of the government schools were not prepared for the pandemic, and many students have been out of school for quite a long time. Double with the economic impact of the pandemic, whether they are going to return to school, especially girls, is a real question. So I would definitely also echo the words of Jen, education technology, and the big gap that we're seeing also generally by 2030. We're looking at 4 billion young people, as per the UN Economic Commission for also in education, that will not go beyond the first year of secondary school. So 4 billion in the next 9 years. We can all imagine the consequence of having, a huge demographic part of the globe population, uneducated and unemployed. So I think the edtech space should be really interesting. We're seeing a lot of very big deals in China and India. We're looking at ways to percolate these silos and bring some of that also into Africa.
Sure. I think we have time for probably just one more question from the audience. So I can probably throw this open to the panel. What do panelists think about providing special support for women running small venture funds before scaling up to go bigger? Who would like to take a crack at that one? Sandrine, I'm going to throw that one to you, I think, if that's okay. In the absence of any hands going up.
Yeah, I think, I'll give the perspective from the 2X challenge in terms of, we were in one of the 11 GPs invited to co-design an accelerator facility. And it was really interesting for me to see all of the diversities of the GPs that were invited into this creative process. And there were some really, really small VC funds. It was really diverse, from like $10 million assets under management to $100 million assets under management. So there is you're right, there is an absolute diversity of type of fund managers that invest across the investment spectrum, different sizes of funds, different strategies. There's a real wealth of insight and strategies to be backed and invested by. And this is something that the 2X challenge, I think, is now recognizing, which was super refreshing for us to see. And then I would also give the perspective of the African Women Impact Fund managed by our colleagues at Standard Bank. They will also put in place the technical assistance, the support, and the capital, because women need capital and deals, ability to do deal making, and maybe less of the technical assistance side, but never mind. It is also there to nurture the next generation of women fund managers across the spectrum, from VC to larger funds and different asset classes.
Sure. Well, I think that's just about time for our panel today. So I'd like to thank all the panelists for a very interesting discussion. And I think whether people listening are experts or beginners, have you do not take away from the last hour. Sandrine, if anyone's interested to find out further about the issues that we've discussed today, where should they visit?
Yeah, I think we'll send out a note to everyone that has attended the webinar with all of our contact details on the panel. So if you want to follow up with any one of us and hear about our programs and our investments, feel free to reach out. We'll be connecting after the webinar.
Great. Thanks once again to all the panelists, and thank you for tuning in and watching this afternoon.
Thank you.
Thank you.
Thanks, everyone.
Thanks, everyone.